Hello everyone and welcome back to the Modern Investing channel. I would like to make an update on Alibaba, addressing the two main concerns about it, future growth and delisting. Let's dive into it. Full disclaimer, Alibaba is the biggest position in my portfolio. I'm down quite a lot. I fully share the pain that many of you investors have when the position dips so much. However, as a long-term investors, we must look at the value of the business and not be distracted by the thicker price. So in this video, I want to address what seems to be the two major concerns around the business. One is that Alibaba is so big already. Can it really keep on growing? And the second one is the concern around delisting from US exchanges. What could happen if that was to take place? Let's address both of them. Regarding the growth concerns, Alibaba recently held its 2021 Investor Day, where it shared its visions for the next years. I'm going to recap here the main take-home messages, and you will find in the description below the link to all material. Alibaba is on the verge to reach 1 billion annual active consumers, where the Chinese online population is around 1.2 billion, meaning room for a 25% maximum increase from here. If we look at the cities penetration, this year Alibaba reached full penetration in Tier 1 and 2 cities, while having a bit of room to grow in Tier 3 and Tier 4 cities. Analysts are looking at this expecting that this will be a major cap for Alibaba growth going forward. However, this is a narrow way to look at the future of Alibaba growth for three key reasons. Number one, having reached the almost full Chinese population does not mean that there is no room to grow. Quite the opposite. It means that the most difficult step was made, and that is making customers acquainted to your services. When a customer is comfortable there is virtually infinite room to grow in terms of how much those users are spending on the platform. And that is what is shown here in this graph. They are predicting that a consumer spending yearly 2,500 renminbi today would grow into spending 10,000 in 4 years. That is a compounded annualized growth rate of 41% for 4 years, assuming no growth in the number of customers. And it makes sense. If you use the platform to buy underwear and t-shirts and it works well, it's just a natural evolution that you start to buy books, groceries, then cosmetics, a new phone, then a bicycle, car, boat, you name it. The 950 million plus annual active consumers that they have engaged today are likely to spend much more in 5 years down the road. And regarding this point, people like to stick to those platforms. The consumer retention rate for high-paying customers spending more than 2,000 renminbi or 7,000 renminbi is close to 100%. Then there is the international part of the business, which is totally underappreciated. It seems like investors put Alibaba in the Chinese box, Amazon in the international box, and that's it. This is a massive misunderstanding, and analysts are not appreciating the potential for Alibaba expansion abroad and as a contender to Amazon and other e-commerce players. One thing that we must acknowledge though is that this international expansion will compress margins to some degree. So we must give up some of the sky-high margins that Alibaba have enjoyed so far. Alibaba is investing massively in setting up a logistic network to win in Europe and Southeast Asia, where it is establishing hubs and fulfillment centers. On top of using the logistic network for its own good and fast deliveries, Alibaba can of course attract third parties to pay for using their logistics services. The market is still wide open. In EMEA, there is only 12% as e-commerce penetration, and out of that, only 15% is Alibaba annual active customers. In Southeast Asia, there is comparable e-commerce penetration, and only a third of it is Alibaba annual active customers. This graph shows the Chinese Alibaba's annual active consumers in orange and the international ones in blue in 2020 and 2021. Despite both growing, the international ones are growing at a staggering 37% rate this last year. I think that although nobody is pricing it in, it will not be long before the international part of the business will be comparable to the Chinese side of it. Third point is that Alibaba is on a path to revenue diversification. It is not anymore only e-commerce. Alibaba is investing massively on a number of fronts, including cloud, media and entertainment, logistics, virtual reality, self-driving cars, artificial intelligence, you name it. Alibaba is a spawner company and it just needs to hit it right with a very few of these initiatives and it will compensate for all the other bets. The cloud business has just turned profitable and we know from Amazon Web Services how profitable that can be. Let's now calculate how much can Alibaba grow. Chinese e-commerce has the potential to expand in lower tier cities and grow 4x just by increasing the average spending per user. International business has the potential to add 1.2 billion consumers, essentially doubling the total customer count. The local consumer services will nearly double the total addressable market within 5 years. The logistic network has the potential to triple the parcel volume. And the Chinese cloud market is expected to expand by 5x in the next 5 years. So there are a lot of 2, 3, 4, 5x in this table, meaning that there is still a lot of room to grow for Alibaba in the sector it plays. And this is not even mentioning the many growth initiatives it has on the sideline that were not big enough to end up in this table. I think that if the management executes, there will still be plenty of growth for the company in the next decade, and I do expect that we will see a 20 plus, 30 plus percentage growth rate for many years, as long as the management keeps on executing at a high level, as it has been doing so far. Then let's move on the delisting fears, and I will be very brief. It's silly. As an investor, this is just noise. If it gets delisted from US exchanges, and I do not expect this will be the case, it doesn't matter. It will be on non-US exchanges and it can still trade OTC. As investors, we must focus on the business of the companies, not on which exchanges it is listed. Take as an example Tencent. In dollars, it trades only OTC, and it is no big drama. In conclusion, Alibaba has still a lot to run in the future years, and it's time to accept the fact that Alibaba is on a path to globalization. It's not anymore only a Chinese company. With this, I see high growth for the next decade, from expansion of the average consumer spending, the conquer of new markets overseas, the cementing of the local consumer services businesses, and the international logistic network, as well as the cloud expansion and other bets. So I'm very bullish on the growth, although I acknowledge that the margins will probably come down along with the international expansion. I'm not worried about delisting fears. If it gets delisted, so be it. As a shareholder, I'm only worried about how much cash the business can produce for its shareholders. Eventually, the stock will catch up with its strong fundamentals. That's it for today. I hope you got value out of this video and let me know in the comments below what you think about Baba as investment at these prices. See you in the next video. Before we go, I must remind you that I'm not a financial advisor and this content is not financial advice. It's just my opinion and you should do your own due diligence before investing in any product. Have a great day.